Good day. This is Michael Bendner from the Center for Fiscal Equity. These comments for the record are being presented both in electronically and by video as an attachment to the House Ways and Means Oversight Subcommittee about tax fairness across the IRS. These are hearings for May 18th. They largely replicate the hearings from October 2020 and November 2020, one on taxpayer fairness and the other with testimony by the IRS commissioner. So to start with, we must distinguish between fairness and justice. Fairness is having your say. Justice is getting or paying what is due to you or for you. Lower income taxpayers depend on the fairness of the system rather than individual fairness. It is costly to make one's case to the IRS when disputes arise. To an extent, they must pay and obey. People who follow Catholic Church sociology will know where that comes from. As long as they can provide information when it is lacking or work out payment arrangements when they do not have funds available, the system is generally fair. Generally, they do, although currently the unopened mail resulting from the pandemic stretches that fairness, as Chairman Neal noted in August of 2022. I'm hoping that the mail has all been opened by now. Higher income taxpayers have more room to argue, as well as more to argue about. Sometimes their attempts to hide income are too clever by half. If they succeed in beating the system, the result for all of us is both less fair and unjust. A wealth tax, because the elements are both debatable and gameable, compound the problems inherent in current capital gains taxation. The tax rate on capital gains is seen as unfair because it is lower than for labor. Now, this is technically true. However, it is only the richest taxpayers who face a marginal rate problem. For most households, the marginal rate for wages is less than that for capital gains. Higher income workers are, as the saying goes, crying all the way to the bank. The injustice in the system is baked in by the maldistribution of income in the economy at large. Prior to the Kennedy-Johnson tax cuts, higher marginal rates prevented the extraction of economic rent from workers. Any labor cost savings went to the government, so gains in the economy were shared by all. In 1981, the problem got worse, and in 1986, marginal rates were traded for reduced tax benefits, with corporations taking the hit. The class warfare began in 1965, which was 20 years earlier, with the Kennedy-Johnson tax cuts. Labor lost, both organized and otherwise. Recently, tax rates for corporations and pass-through income were reduced, generally to capital gains rates and capital income levels. This is only fair and may or may not be just. The field of battle has narrowed between the parties. The current marginal and capital rates are seeking a center point, as most of the recent tax law was based on negotiation, even as arguments flared publicly. And the recent tax law I'm talking about is the 2017 law, the Tax and Job Cuts Act, and that's not a Freudian slip or a slip of the tongue, because we found out that jobs were cut. Of course, that would never happen in Washington. Agreement with fractured argument behind the scenes. No, never ever. I could tell you stories. Oh my God! Compromise on rates makes compromise on form possible. If the Peas and Affordable Care Act provisions are repealed, a rate of 24% is a good stopping point for pass-through corporate capital gains and capital income. Although I think 26 is I wrote this a while ago. It's 26 is the good rate in the middle. 28 is the one that the president has proposed. A single rate also makes conversion from self-reporting to automatic collection through an asset value tax. levied at the point of sale or distribution possible. Something compromised, we can then just have it. This would be both just and fair, although absolute fairness is absolute unfairness, because there would be little room to argue about what is due and when. So, there's no more gaming the system. Ending the machinery of self-reporting also puts an end to the quixotic campaign to enact a wealth tax. Out of fairness, if the Revenue Committees do give its proponents an opportunity to testify, it must also hear from me as well. It would only be fair. So we also talked about let's also talk about Build Back Better, which is included. Pieces of it are included in the testimony. The child tax credit should be the main focus of Build Back Better, as well as child care and sick leave. While other matters are certainly important, they realistically will have to wait for a larger Senate majority. In the interim, it should be shouted from the House tops that the CTC, the child tax credit, is anti-abortion legislation. That's especially true now when Roe seems to be on the way out. The Catholic bishops must be urged in the strongest possible language to assure that increasing the CTC be scored as a must-pass pro-life vote. As we have said before, to end the stink of welfare that Senator Manchin now objects to, CTC payments should be included with wages for all employees, not just those with 3 or more children. They should also be distributed through other federal and state assistance programs, some of which could be reduced to do so, like food stamps and SNAP and other things can go down as CTC payments go up. For middle income taxpayers whose increased credits are less than their annual tax obligation, a simple change in withholding tables is adequate. Procedures are already in place to deliver refundable credits to larger families. For the coming year, they merely need to be expanded to all families with children. Employers can work with their bankers to increase funds for payroll throughout the year while requiring less money for their quarterly tax payments or estimated taxes to the IRS. The main issue is working out those situations where employers owe less than they pay out. This is especially true for labor-intensive industries, and even more so for low-wage earners. A higher minimum wage would make negative quarterly tax bills less likely. Indeed, no one should have to subsist mainly on their child tax credit payments. Please ask either orally or in written form how such CTC proposal might work and how it would make things easier for taxpayers whose returns would be simpler, with few having to file at all. Thank you very much for your time. And as usual, you can email me any questions or call. The information is, of course, attached with the testimony.